You already know what time it is. 4Stocks.io May 2018 edition. This is my favorite series, the most popular series on the entire channel. We're going to dive into what my 4 biggest investments are in the stock market right now and why I'm so excited about these companies. You guys know I'm a long-term investor. I invest in companies for several years out, okay? So these 4 companies are my biggest holdings right now. I believe in them a lot over the next few years, and I want to explain why into depth on each of these so you can fully understand why I'm so excited about these 4 companies. So I hope you guys really enjoy this. As always, make sure you get in my private stock market group if you want to. Basically, within 48 hours, I'm closing that down for the remainder of the month. So many people have joined over the last few months. I just want to focus on the people that are in there. First link down there in the description. Like I said, within 48 hours, it is closing, and it will probably be closed for at least a month, if not several months. So if you want to get in there, here's your opportunity. My 4th biggest investment at the moment is a company named Cirrus Logic. Now, this one's real interesting because they're actually expected to report earnings in like 1 or 2 days from now, from the posting of this video. So that one's going to move up or down a lot depending on those earnings there. This is a company that right now has a trailing PE of 13 on it, a forward PE of 9 on this company, okay? 9, and they've got a lot of growth ahead of them over the coming years, okay? So this is a company that was founded in 1984. They got $1.5 billion in revenue, okay? They're in the audio space. They got almost 1,600 employees, and they are adding a lot of employees right now. They have audio codecs, amplifiers, MIMs, microphones, all that type of stuff that goes into smartphones, okay? If you look at the breakdown on what's in an iPhone and even some of the Samsung models, you're going to see a lot of Cirrus Logic components in there. Some of the other smaller smartphone makers, you'll see some of their components, but mainly Apple is their big dog customer, okay? So this is a company that's very focused on spending money on R&D. This isn't like a company that's like thinks their best days are behind them or something like that. It's a company that's spending heavily on R&D because they have some huge growth opportunities over the coming years that they need to basically hire more employees to go after, okay? So this past year, they spent over $300 million in R&D. They will spend even more in 2018. They're hiring like crazy right now. They have a long-term track record of growth, okay? This company is not just some kind of like fly-by-night company that they just had one lucky year that their revenue happened to go up or whatnot. This is a consistent company. Starting in 2010, they have had phenomenal growth, okay? So for 2009, they did 175 million. Then they go up to 221. Then they jump all the way up to 370. Then things kind of slow down a bit. They go to 427, okay? Then 2013, they just go gangbusters and they go all the way to 810 million. 2014 was kind of a calming year for the company, okay? In that year, the stock dropped huge. It went from a $45 stock to like $16 and change at one point, okay? Then their revenue gets back on track in 2015 up to 900 million. Then 2016, bigger growth, over $1 billion in revenue, over 1.1 billion. This past year, $1.5 billion in revenues for this company. So it's a big growth company as far as, you know, they'll have some years when it's just kind of like a flatline year. That's what this year is, okay? This year is just kind of a flatline year. They're expected to get back to growth really starting next year, and then huge growth potentially in 2 years from now, okay? So that's kind of where the company is at the moment. Now, their biggest customer is Apple by far. Year-round, Apple is around 80% of their business, okay? In Q3, which is their heaviest quarter as far as Apple goes, it represented 86% of their revenue, but generally speaking, it's around 75 to 80% of their business comes from Apple. A huge opportunity is Samsung for the company. Samsung is technically a customer of Cirrus Logic, but they only do a certain amount of business with Cirrus Logic. It's a very small amount at the moment. However, Cirrus Logic has a phenomenal opportunity to win Samsung back as a full-time customer and be in all their flagship products within a year or so. And I think management is pretty confident that they're going to be able to do that. We shall see over time, but that's a huge potential growth vector because you look at the numbers Samsung moves is by far the second, you know, top smartphone maker you want to be in as far as flagship units, because that's the type of business Cirrus Logic is in. They're not just into like let me create a chip and then you go buy that chip, you know, manufacture out there and integrate that in your product. Cirrus Logic's very custom, okay? They're like this with their customers. That's how they got to get back to with Samsung, like this, okay? And get like they are with Apple, okay? That way they're in all the main devices and whatnot. Digital headsets is a huge opportunity for the company over the coming years in the Android space specifically. If you don't know what a digital headset kind of means, basically there's the headphone jack, okay? The headphone jack was removed from the Apple iPhone starting last year, okay? And that's going forward. Now, in the Android space, you're going to start to see that in a lot of the flagships starting this upcoming year. And within 2 or 3 years, pretty much every single flagship phone, whether it's, iOS or on the Android side, they're going to have no headphone jacks in them, okay? A huge beneficiary of that is Cirrus Logic, okay? They have planned for this for quite a while. The removal of headphone jacks. Basically, phones get slimmer and slimmer. The headphone jack, is kind of holding things back. A very hard thing to waterproof in a lot of phones and things like that. So, every smartphone maker is going that route. Whether you hate it or love it, it's not for you to decide. That's what the smartphone makers are doing, and they're all going to be going that over the next couple years. Cirrus Logic's a straight beneficiary of that. They are also all the way through on the audio signal chain, okay? So they have everything from the microphones of the phone, they got the codecs, they do, audio DSP, audio software, the amplifiers. They have the full signal chain of audio, and they're pretty much the only company that can offer all the products in a customized environment like that out there, okay? And give that type of service, because most companies, they might dabble here, dabble there, they might have codecs, they might have amps, they might do microphones. There's very few companies that can kind of integrate them all. Cirrus Logic is one of those, and microphones is a huge opportunity for them over the coming years, okay? It's another big thing. Now, let's look at the balance sheet. So balance sheet is phenomenal in this company. They got $413 million in cash. This was as of the last quarter. They reported that number should be even higher now, up from $329 million in the September quarter, and they have no debt on that balance sheet at all. Q3 inventory at $193 million. They got a big share buyback on right now. They have $60 million remaining. An additional $200 million program was just announced here in January. So, why these shares are low right now, they're being able to buy them at, just across the board. They're being able to buy heavy right now at these very, very low prices. And a few years from now, when Cirrus Logic stock is much higher than it is right now, they're going to look like geniuses for buying all these shares right now, because they're definitely taking advantage of that right now. Now, we look at their financial results. Obviously, right now, they are not in growth mode, okay? So Q4 fiscal 2017, they did $328 million. This quarter, they're about to report, they're expecting around $320 million. You can look at the EPS numbers and whatnot. Not supposed to be a growth year for Cirrus Logic. That's the bottom line. I'm in this one already because I want to be in it, because I feel like the shares are very cheap where they're at right now, and also because I believe this company is going to grow a lot over time. They got microphone business, which is a huge opportunity for the company. They have the potential to win back Samsung as a full-time customer realistically, maybe within a year, which is very big for the company. Digital headsets, that's straight into Cirrus Logic's strength there, guys. With these companies starting to remove the headphone jacks and things like that, it's all just kind of playing into Cirrus Logic's hand, and the company's phenomenally run by Jason Rhodes. So I'm very, very excited about that business over the next few years. Toll Brothers is my third biggest investment right now. Luxury home builder. Toll Brothers right now has a trailing P of 11 on it, a forward P of 8 on this company, okay? The creme de la creme home builder has a forward P of 8 on it right now, guys. It's insane. And look at their business right now. You would think a forward P of 8, their business must be struggling, or they must not have any growth right now, or they must be shrinking their business, when really their business is on fire right now, okay? Look at units. Look at the unit number, up 20%. Dollar number, this is for their last quarter they just had. Dollar up 36%, guys. Average selling price up 14%. Look at the backlog units, up 21%. Look at the dollars, up 28%. Deliveries, everything across the board, this company is on fire right now. But it's priced at an 8 PE, which is like, like the world's gonna go into downturn or something like that because of interest rates. But really, as you'll see here, interest rates don't affect this particular home builder nearly as much as it might potentially affect some of the smaller home builders and whatnot, some of the lower end home builders. We'll kind of talk about that. This company is well diversified across the country. They're in all the markets you want to be in. California, out here in Vegas, they're in Phoenix, they're in several markets in Texas that you want to be in. Dallas, Austin, Houston. They're out in New York City, Charlotte, North Carolina. Obviously, that's a huge growing market. Raleigh, North Carolina. They're in the Florida region. They're in all the growth markets you really want to be in. They're very well diversified. It's not like they're just in a couple states and that's it. They're in a ton of states, and all the states you really want to be in as a home builder. This is a big chart here, guys. This is a big chart, okay? This shows the average selling price of a Toll Brothers home, okay? It's around $850,000 $126,000 versus, you know, look at the other home builders, you know, a Lennar or a Pulte or KB Home or whatnot. It's less than half of it, okay? Those companies are really, you know, more in the middle class, competing in the middle class, okay? Whereas Toll Brothers is really kind of more toward the wealthy, all right? 24% of buyers that buy a Toll Brothers home buy it all cash, okay? So nearly a quarter of buyers that buy a Toll Brothers home buy all cash, all right? So with interest rates potentially going up, who's going to be more affected by that if someone's going to be affected by that? Well, first off, if interest rates are going up, that generally means we have a pretty strong economy, you know, good low unemployment, wages going up, things like that. Like interest rates just don't go up for no reason, okay? So usually in an economic climate like that, people are feeling pretty good about themselves, pretty confident. They actually have the money to go buy new homes and whatnot. So it's not like interest rates going up is all bad. If they keep raising interest rates, it's because the economic climate is good right now, and there's, you know, a lot of homes being built and whatnot. Right? So, and then in Toll Brothers case, does a Toll Brothers buyer, if the interest rate goes up 0.25% and they got to pay an extra $100 or $200 or let's say even $500 on their mortgage, is a Toll Brothers, you know, buyer out there? Are they like, oh man, I can't buy a home, I can't buy a Toll Brothers? No, that's not the Toll Brothers buyer. These people are buying, you know, homes that are, you know, $800,000+ on average. Some of them, you know, several $1,000,000. This isn't the stuff that phases them. Now, maybe a Pulte or KB Home, maybe that $100 difference, maybe it breaks the bank for someone that, you know, makes $50,000 a year. Toll Brothers buyers don't make $50,000 a year, okay? These people are making 6 figures plus a year and generally have a lot of money in the bank. A fourth of the buyers buy a home all cash, guys. $1 million home, cash, okay? You know, that's the type of company we're dealing with here, okay? It's like the Wynn Resorts. It's a Wynn Resorts of home building, I call it, okay? High end. Now, a lot of people think, oh man, we're building so many homes right now, right? And it's like, no, not really, we haven't, okay? From 1970 to 2007, there were around 1.6 million homes built per year in the United States of America. Whereas, you know, from 2008 to this past year, there's been around 885,000 homes built on average, far less than what is built historically in the United States of America. Meaning, in my opinion, we're not topped out as far as the market goes. And oh my gosh, we're building homes like crazy. Look at the data, look at the actual numbers behind it, and it shows you that we are not even remotely close to the averages, okay guys? Never mind, like, you know, we can look at 2006 or something like that. We're not even remotely close to something like that, but we're not even near the, you know, the average production, okay? So we got a long way to catch up before home building gets done and whatnot. So very excited for Toll Brothers over the next few years. My second biggest investment right now is Callaway Golf, ticker symbol ELI. They just reported some numbers and they were really good. We'll look at them here. Callaway Golf, okay? This is a company that has a bit of a higher type forward PE, okay? Close to 22, okay? So, you know, all my other companies are very low forward PEs, much lower than the market. Callaway's not, but Callaway has really nice growth right now, which is why I'm so excited about this one, all right? Net sales. So let's look at this past quarter that just reported last week. Net sales were up nearly 32% in Q1 with double-digit growth in core business as well as the addition of Travis Matthews business, which is very strong. They're very, very bullish on Travis Matthews. Hard goods market share was around 26%. They had the #1 market share in total hard goods, total clubs, total woods, total irons, and total putters in the United States of America. Golf ball business was up 16.2% year over year. That's really strong growth considering rounds were actually down because of some of the colder weather, guys. By the way, that analyst, you know, that had predicted that Callaway sales were going to be really down was completely wrong. Obviously, they blew numbers away. Yeah, his premise on, you know, rounds being played less and whatnot was true, but as far as, you know, their sales, they blew the numbers out of the water, okay? Let's look at Asia. Asia very strong right now, led by Japan. Strong Q1 led by Japan with net sales up nearly 42% on a currency neutral basis. Also, Korea is very strong right now. They're doing phenomenal in Asia. Europe, sales were pretty strong. Net sales in Europe were up nearly 15% and 2.5% on a constant currency basis, okay? Marketing spend was down 7% and rounds played in Europe were down 22%, all right? Rounds played were down 22% and they still were able to find nice growth, okay? That's amazing. When rounds are down in Europe 22% because of the colder weather and whatnot, and you can report those type of numbers in growth, that's like insane, guys. That is insane. That means your business is really strong right now, okay? 2018, the summary and outlook, basically they raised guidance for the year. They raised revenue guidance by 55 to 55 million. They raised EPS by 12 to 13 cents. They're expecting a very strong year based upon the start. I mean, rounds are down across the board and they still blew numbers out of the water. Look at these charts here. This is a big one, okay? This shows you over the past few years what they've done. They've gone from basically 274 million they did in Q1 of 2016 as far as net sales go to this year they did $403 million in net sales, all right? Gross margin went from 48% to now it's up to 50%. Income from operations went from, 44 million last year to now 86 million this year. The trailing 12-month EBITDA up massively, guys. Across the board, it's just phenomenal. So their business is on fire. Great growth right now. It should continue through at least a year, probably into several years in the future. I feel like golf is bottom. I think that's kind of proof in the pudding as we look at the numbers. They have the Tiger effect, which I've talked about, and people kind of like laughed off, and now they're seeing the numbers come out and they're like, oh, Jeremy called that one again. Okay, and then they also have a 15% ownership stake in Topgolf, which is a business that is growing massive right now. It is a massively growing business, a money-making machine. So I am super excited about Callaway over the next few years, guys. I think I'm going to do great in that one. Once again, this is my more of a growth play than a value play because it's a little bit higher PE, but man, those numbers are strong. Those numbers are strong. My biggest investment is now L Brands, okay? This one, I don't even think I had any shares in the stock as of like 2 months ago, and I've added so many shares over the past month, it's insane, and now it's actually my biggest investment in my total portfolio, okay? L Brands, if you don't already know, they own Victoria's Secret, they own Bath & Body Works, they also own Pink and a few other brands, but let's be honest, Victoria's Secret, Bath & Body Works, that's where they get the majority of their business from. So L Brands here, it's a company that's at a trailing and a forward P of 10. All right, very, very, very low. And this is a business that has struggled. We'll look at some of their numbers, and it's a business that has struggled, and that's why the stock, struggle, and that's why, I'm so interested in buying it now because the business has started to turn around, even though the stock hasn't started to turn around. It's a perfect opportunity, okay? So net sales for this past quarter were up 7%, all right, for the past quarter. So nice growth there. Gross profit was up around 5%. Net income was up 2%. Net income per diluted share was up 4%. So kind of like slight growth numbers, okay? It's not like gangbusters numbers. It's not like Callaway Golf or something where they're showing 32% sales up and we doubled EBITDA and all that. No, it's much slower growth company, but it is still growing, okay? And at a 10 PE with these type of brands that aren't going anywhere, I like this one a lot, okay? Now, I'm going to show you something that really, really excites me, and no, it's not those chicks and bras up there, all right? Comparable store sales for Victoria's Secret. This shows you the fourth quarter 2017 versus 2016. Comparable store sales were down 6%, all right? Comparable sales down 1%, for the last quarter, all right? But if we look on a yearly basis, they were actually much, much, much worse, okay? 8% comparable sales were down on Victoria's Secret, for instance, okay? So that means in the last quarter versus the last year, things have gotten a lot better, basically. Things have gotten a lot better, okay? The year was ugly, super ugly. But then if you look at it versus the quarter, it was like, okay, things are starting to improve. But that's not it. They've improved even more. This is a business that is really turning around. Now look at comparable sales actually increased for Victoria's Secret by 1% in March, okay? You might say, well, 1%, what's the big deal? The fact is, when you go from your business decreasing as far as the Victoria's Secret line, 8% last year, and now you can get to a 1% growth, that is huge, guys. That is absolutely huge. Look at the Bath & Body Works, up 10% comparable sales, okay? So this is a business that is really starting to turn around. It is really strengthening, okay? They had an ugly, 2016 and 2017 because they kind of exited some businesses in the Victoria's Secret landscape, okay? And they kind of had to figure out, the more direct-to-consumer business. Now they're much better at direct-to-consumer. Now they got, the exits of swimwear and apparel out of the way, and their business is much more focused now. And now this is a company that is really turning things around and getting back to growth. What, am I expecting this company to have, massive growth? Absolutely not. I do not. But I expect this company to grow over time? Absolutely. In EPS and revenue, I expect this company to grow over time. I think things are really going to start to strengthen. I think, investors will start to see this as the year kind of progresses and whatnot over time. And, if people will start flocking to the stock. I love the company long term. Those brands are just, as strong gets. I mean, look at Victoria's Secret, as far as how many followers followers they have on Instagram. They might be the most followed company literally on Instagram. Like, it is absolutely insane, guys. Super strong brands, and I just love the company overall. So very well run company. They're getting back to growth, and I think I'm going to do great on that one over time. But I would love to know what you guys think about this. As always, in the comment section, what do you think about all these stocks? Do you own any of these stocks? I would love to hear from you guys as always. Anyways, make sure you follow me on Instagram if you have not already. Links down there in the description. Thank you for watching. Have a great day.